Hey guys, this is my weekend video. So you're looking at my chart right here on the ESs here. I'm going to use them for what I'm thinking. And you're asking yourself, well, why didn't we close up to 38.6 and finish the top of the channel there Friday? And the question to answer that question, we did close into resistance. It's just not visible on this chart. And I'll explain that why. The line we did close right here near, that's a 78.6 of the channel. A lot of times the 78.6 will act as resistance and for a long time before eventually tagging and rejected. Okay. So, this is definitely a possible on our channel here, definite possibility that we could be rejected here. So be aware of that scenario. Okay. Okay, let me find this. Second way to look at this, you see how this channel lines up pretty good here. How I've this channel. See how we've just looked above that channel. A lot of times they'll look above a channel in reverse. See what they did there. See what they did there. A lot of times they'll do that. So this is another confirmation we might be topping out here. Okay, guys, this chart here, I tried to clean it up a little bit, trying not to have any studies on here and stuff. Right here, right now, we are tagging. We closed Friday tagging the Head and Shoulders breakdown. We rallied right up into that. So bottom line is we had a major breakdown of the Head and Shoulders, and we actually back tested it as of closed Friday. That's why we are technically into resistance to start the weekend. And they rallied it to right into the close too. So keep that in mind also. Now, when we finally broke out above this area on the way up, this was way back in 2020. Okay, this is the first swing high, and this was our first swing low area. So we've done actually a 50% retracement of those two areas. Okay, and then the 2020 close, 2020 close and 2021 close, we actually closed right here at the 38.6 of the move. Definitely warrants the idea that we've hit resistance. So definitely keep that in the back of your mind here going forward. Okay, I just added the Bollinger Band, exponential Bollinger Band study real quick here. And so basically what we got going on here, guys, this line right here is your 2 standard deviation move. So we have a breakout beyond our 2 standard deviation move. Reach to the sky here on the daily into that 50% retracement and the 38.2, on the yearly time frames. Okay, into major breakdown resistance of the Head and Shoulders here on the ESs. Definitely something to keep on watch here. This is an extended chart. Okay, anytime you get into the 3 standard deviation range, that suggests the markets were reaching for a price target. So be aware of that. Okay, guys, this is volume distribution. Okay, volume profile. 1 second here, I gotta get my there's my Epic pen right there. Let's get this Epic pen going here. So bottom line is, where's my squiggly line? There it is. Here we go, guys. If you're using volume profile theory, okay, you can draw a double B formation for the volume profile. Okay, this is typically marks out. Right here was one group of buyers and sellers. Right here is a second group of buyers and sellers. Going into the close Friday, the primary volume, distribution, buyers and sellers as of Friday were perfectly, we're meeting, in equilibrium right down here around the 4110 area. Okay, guys, for most of the day Friday, and then we had that explosive move out into the close, giving us a double B formation into resistance. So what this is basically telling me that all this inventory up here was getting distributed, okay, and almost as much as what all the morning session was doing. Okay, so here we are. You're into the very late stages of the day. I think it's the last hour and a half. And we got almost as much volume up here in the very right into resistance as what we did the entire rest of the trading session. So be aware of that scenario. That is a bearish case, that they were taking profits right into resistance. Okay, 1 second here. There it is. Okay, another way of looking at this volume profile. Okay, this is basically the first 4 hours of the trading session. This is the last 4 hours of the trading session. Okay, it didn't exactly line up perfectly here, but my main takeaway is that we managed to go up and rejected into the close, right into the afternoon session's volume point of control. So of all the inventory into the afternoon session, we managed to close right into equilibrium for the afternoon session. So keep that in mind. There was major distribution happening into the close there Friday, suggesting, the bulls were getting a little bit nervous, in my opinion. And the fact that we're right into the bottom of the head and shoulders for the bull bear cross, a lot of traders decide, hey, this is the time to take my profits and run. So just keep that in the back of your mind. So another takeaway here, guys, once we came up into this area last time back in May, we were here for a week and a half, okay, into this trading area. So be aware of that situation. We could very well be coming up to the 4160 and still be a rejection of this trade. This line in the sand does not mean it's a line in the sand. That's what I'm getting at. Okay, we have a gap right above us here on 4160, suggesting that they might take it up and do that. If we do similar to what we did on the way up, we didn't actually find resistance because we are coming off of a higher low here. So 42.25 would be the next resistance area that when we first broke out into this head and shoulders pattern, that was the area that found the first resistance, and that was with no historical value suggesting that that was going to be resistance. So just remember that 42.25 is a potential. And then if we were to do a correction here, reset the oscillators and stuff, you would think your range worst case scenario, well, you never know what's worst case scenario, but you would think you'd find some support around the 40-50 area. Okay, that was that whenever we first broke out, had a sell down, it came down to that 40-50 area as support back then. Okay, now a quick takeaway here on our Qs. So what basically we had a massive little rally right into our midline of our Qs here. So be aware of this situation too. Without some sort of major catalyst, we might be into a resistance area. Even though we have put in a higher high, technically, we have not broken out of the pattern, in my opinion. Okay, so this could very much be a bull trap. Okay, even though we put the higher high in, it's technically the pattern has not changed. So be aware of that scenario going into tomorrow. So guys, here's my next view here real quick. This is a secondary Andrews pitchfork. We're at the 61.8. Okay, we do have some divergences going on here on our oscillators. Be aware. This definitely has the potential to roll back over and backtest the midline. See how we just managed to literally come down and wick off this midline on my channel. That has the potential coming into tomorrow, that scenario happening. Okay, guys, another view here on our Qs. We managed to close right above our 2020 close. So that's a little bit slightly more bullish. But I told you guys it was reaching into that Andrews pitchfork for a technical resistance area. Okay, so I don't know what's going to happen tomorrow. None of us really do. But I do want to point out it has the recipe for a bull trap. So just be aware of that scenario. The bearish case is down here. And so bearish case would be that we reject up here because we're into that Andrews pitchfork, as a fake breakout, and we're going to be coming back down. These market maker moves have not been updated. I can erase those actually. Damn it, can't erase it, can I? But don't trust these right here. Those are not been updated for the week yet. So bottom line is FOMC now is your base that you draw your fibs that I would draw your fibs off of right now if you were trying to do a retrace. So this is the trading range on the downside, in my opinion. But then again, on the upside, if we do get some bullish momentum, uh, this was the first place whenever we broke up to these levels that we found resistance on the way up. Okay, and then I anchored it right off of the 2020 close. So that would suggest that 2020, all the inventory of 2021 was valid, and we are breaking out back into 2021's inventory. Okay, so this is my bullish scenario, this is my bearish scenario, and so keep that in mind here going forward here. And keep in mind we haven't even started breaking into that 2021 range yet. I do have the longer term fibs over here just in case we do that. That way I can see some potential targets. If we were to start accepting prices back into the 2021 inventory, uh, uh, that you have a potential upside almost to 335 here on the Qs. So be aware of that scenario. Yeah, that kind of lines up with the 78.6. So somewhere around the 330, 332, somewhere in this area is likely an upside target if we were to continue to go higher here in the markets. So those are two scenarios. Like I said, it's still looking more like a bear trap or a bull trap. So another way of looking at this, guys, we are beyond our 2 standard deviations with your Bollinger Band on a daily time frame. Okay, so keep that in mind, guys. We are extended, really extended, going into starting this week. That suggests, in my opinion, it's better odds, that we're going to be coming in than pushing, coming in and digesting sideways. I'm not saying we're not going to stair step sideways right on the 2 standard deviation. That's definitely the case, but trying to push beyond the 2 standard deviation, a real uber market, that's much more difficult once you get past that 2 standard deviation, and we know that we're into some resistance here. Okay, one thing I do want to point out here, we did have more volume up here in the upper distribution than we did actually in the on the SPY. So keep in mind this is even a more pronounced B pattern, uppercase B pattern here on the volume profile on our daily, suggesting, like I said, this upper distribution might be some liquidation going on there. So it seems like the liquidation was actually stronger here in tech versus what was even happening in SPY, in my opinion. Okay. On the 4-hour time frame, the ES is kind of threw them off. If you use the 4-hour time frame here on your volume profile, change the settings, it works really good with just the regular equities. When you do the futures, it throws things off a little bit. So that's unfortunate, but yeah, this is your morning inventory. This is your afternoon inventory. As you can see, we came up. We couldn't even get to the top of the volume profile, but for a few seconds. Okay, there was strong sell activity. That's why that candle is weak there. There was strong sell activity right here near the highs. Okay, that's what it's suggesting right there. This is what we got to look for right now to see if we are going to accept prices below 314 going forward here. Okay, so we really got to keep a close eye on that to see if 314 is going to hold, because it is very critical. Okay, and the trading range is actually even tighter here on tech versus SPY. So be aware of that. Friday, we moved tech up faster earlier in the week, but it seems like they were losing some mojo there on tech there Friday. So be aware of that, with the exception of Tesla, of course. So be aware of that scenario. Okay, IWM, guys. As you can see, we are breaking down out of this possible down channel for a possible continuation here. So be aware of that. and we are above the Andrews pitchfork as well. So keep that in mind too. So we got two things suggesting a breakout here. But keep in mind your candle size. You would have thought with both of these things breaking out, you would be breaking out with larger candles already. And we don't quite have that yet. So be aware of that scenario. Here's another thing I want to show you guys. We're trying to break out, like I said, on IWM. I showed you on that last chart, okay? Divergence. MACD is not supporting, and we even have a negative histogram into that possible breakout here. Not looking too healthy here on the 1 hour. Divergence. Not looking overly healthy. Divergence. Divergence. So, all four of my indicators are not supporting a breakout scenario. So be aware. Looks like a bull trap. Another thing I want to look at here on the weekly, that's our skew. It looks promising. We did have a closing price above our regression line, okay, which started way back here in, I can't tell what the date that is, June 21st. So, so the trend we had, the downtrend we've had in skew since June 21st is giving us signs that we might be, pushing to the top. We're not breaking out of the regression by no means, but we might be putting in a base right here. And, in that case, suggests that we might have a bearish scenario here going up here. We might have, this might be marking us a divergence, a bullish or a bearish divergence, because the skew is not making fresh lows, and the markets are rallying, suggesting that we might be getting long in the tooth in this rally. Okay, another thing we want to keep a close eye on here, guys, your VIX, your volatility of your VIX, guys. So bottom line is, guys, you see what's going on here. You can draw a line right here. Okay, you see this? This is marked. This is marked. If you go back, this has marked potential extreme directional. This has marked extreme directional moves in the market, and it can be a very good forecaster that we may be hitting our limit to that directional for that one-sided directional move. So if anything, coming into tomorrow, I expect a bid in the VIX, okay, because we have hit what seems to be very critical resistance areas. I'm actually starting to see, I am expecting the VIX to start not putting in new lows here. I'm expecting it to start ticking up. So definitely that is a contrarian indicator that the markets may be needing to do a reset. I'm not saying we can put it in a higher low, but I do think most of my indicators are suggesting that we are not going to just continue to the upside here, that we're going to have to back and fill some here on this market at the very least. So that's pretty much what I got to say here, guys. Please like my video if you like it. Please retweet me on Twitter, Gumby9662C, and please leave comments below of stuff that you're seeing that I'm not seeing. I do see a lot of stocks up into resistance this weekend. Doesn't mean they're not going to break out, and we're not going to have long scenarios tomorrow. I might be all long tomorrow in the markets. I don't know yet. But I do want to give you the bearish side just in case this manifests itself. Okay, guys? Okay, thanks a lot for listening to my video.